2024 is coming to an amazing close, right? What was the year of 2024 starting early 2023? What was this? These 2 years, a year and a half. It's what? Buy the dip. Buy every dip. We had a massive dip with the Japanese carry trade, debacle, right? I mean, NASDAQ sold off 15%, S&P sold off 11%. There have been a little small, like 2, 3, 5% sell-offs in between. But if you bought every single dip, you would have been well off, well off, right? So is that going to continue? So if 2023, latter part of 2023 and early, all of 2024 was buy the dip year, is 2025 going to be, again, another buy the dip year? Well, we will know once we get a dip. We're not even getting the D of the dip. We just keep making all-time high after all-time high. So I guess, yeah, right? I mean, who am I? What am I arguing with here? Mark is making 56, 57th all-time high. Somebody Google it and put it in the chat. I don't know. I think it's 56 or 57. But who cares? This is an all-time high. So is 2025 going to be one of those? Buy the dip. Just buy every dip. Just hold it like this. I go, send it. I'm like, okay, I bought the dip. And then 2 weeks later, I'm swimming in cash. I'm like, okay, cool. I mean, you could do that with individual stocks too, and which I do show my watch list. Those are all buy the dip type of uptrending or downtrending issues. Either you buy the dip or you sell the rally. Well, it's been the year of buy the dip. Is it going to continue? Well, let's see. There is a thing they created, by the way. It's called a euphoria meter. Okay, this is no joke. This is serious stuff. So, what is the euphoria meter saying? And this goes back to 1992, by the way. This is not something that just created like Kalshi, the betting site, right? Euphoria meter is an indicator measuring investor sentiment. Hit a record 1.1 points, right? This metric uses S&P 500 forward PE, which is standing about 26 now, which is extremely high. But then the earnings are supposed to be up 25% this year to 275 on the S&P 500, the forward PE, the volatility index VIX, which I quite often have talked about, and the bullish sentiment from investor surveys. Okay, so that measures that. So that's on the right-hand side, that's the red line on the chart. You guys see where it's at? I circled or I put an oval on it. This has never been this high. And the top chart, the black chart, is the S&P 500. Okay? And as you guys can see, every single dip, actually every single potential massive dip since 08, it's been a buy. There has been like these little hiccups you guys can see, and the big hiccup was like the pandemic, obviously. But look at this, every single time, every single dip. Okay? And this goes back to 92, but since 08, any dip you buy, your dollar cost average into an ETF, you're doing great. But the euphoria meter now is sending warning signals. Again, these are all, little analytical tools that you pay attention to. You don't get stuck with one because it creates a ridiculous amount of personal bias. And you're going to go, oh my God, euphoria meter is 1.1. I should short the market. I'm like, no. Euphoria meter is just another thing, like the CNN fear and greed index. I don't know, all these things. Now, what do I watch when it comes to these types of things? Okay. But to finish this, bullish sentiment is unbelievably strong. So if everybody is bullish, okay, if everybody is bullish, who's bearish, right? So you have to always think the other side, because that's what Warren Buffett has done. That's how he's created his wealth. What did he say? When there's blood in the streets, I'm a buyer. Well, there is no blood in the streets. There's nothing but the euphoria meter going through the roof, right? Now, as far as I'm concerned, what do I watch when market's getting a little overheated? I have certain indicators that I watch. One, I watch the equity put-call ratio. You guys can Google it. It's freely available. You can get it from the CBOE website or NASDAQ website, okay? Put-call meter right now is about 0.6. 0.6 is very, very low, meaning everybody's into calls, okay? Another thing I watch is AAII Investor Sentiment Index. Those are the numbers that AAII puts out as far as how many investors are bullish. When I say investors, these are all mutual funds and analysts, how bullish they are. So the more bullish they are, the more bearish you have to be, because there is a law of averages here. If we have 100 people in a room, okay, if 9 are bullish already, which sometimes the numbers get there, and at 0.6 and put call equity ratio is kind of saying that. And by the way, put call ratio tops about 1.3, 1.4. When it gets there, you buy the market. When it's at 0.6, you just kind of be really careful with it, because that means everybody is buying calls. When everybody is buying calls, what happens? Right? Okay, we all know the answer to that. So my thing is, I look at certain things, if I'm going to take a stab at shorting the market here and there, but not euphoria meter. But then I thought I mentioned it. I think it's a pretty cool thing, because it looks at 3 different things combined that I do. I look at VIX as well, right? It's a volatility index, and I would highly recommend you do that. VIX is down to 15 now. And when the market tanked, during the Japanese carry trade debacle, it got up to like 50. So you guys got to pay attention to all these things. But that's, that's for me to every week, every Monday, Wednesday. I will give you guys the warning when I see what's going on. And so 2023, 2024, buy every dip. In fact, since 08, buy the dip, go to the bank. Is it going to be like that in 2025? Look, man, over long periods of time, the most important thing is how much time you're spending in the market, as opposed to how much time you're spending timing the market. Timing the market is really, really difficult. Time spent in the market is going to give you the financial freedom that you deserve, and that's what you should do. That means passive investing. That means dollar cost averaging. That means picking a couple of ETFs and keep plopping money into that. And that's how you create financial freedom. Can you trade like I do? Yeah. Can you beat the benchmarks? Of course you can. But for the average investor, that's not what they should be doing.